Hi there, this is Sandra with the Mortgage Center. I'm so glad you joined me tonight for our next Facebook Live. And tonight we're actually going to be talking about what you need to know about mortgage financing when you're buying and selling a house. I'm actually the principal broker of the Mortgage Center in Guelph, and I've been in business for over 20 years, and I think I've financed almost 11,000 mortgages. So here are just some really great insider tips on what you need to know before you're going to put your house on the market as it relates to mortgage financing. So the first thing I think you want to look at is figuring out what kind of equity you have in your house and what are the costs. So if you're not ready to talk to a realtor, we totally understand. We've got a really great tool at the Mortgage Center called Purview, and we can run a quick valuation on your property just to kind of give you an idea of what's happening in the market, and it gives you sort of a range on what your house might be worth. As you kind of get closer to actually putting your house on the market and thinking about that process, we've got a great group of realtors that we work alongside, and if you don't have a realtor that you're working with, we can recommend one. So understanding how much equity you have is important, but also understanding the costs. So the first conversation that I normally have with a client is, okay, what do you think you can sell your house for? And then we start deducting the costs. Normally the real estate commission is 5%, okay, 2.5% for a seller and 2.5% for a buyer. As a seller, you have to pay for that real estate commission. I think there is some room for negotiation. One of the most overlooked things when you're selling real estate as it relates to the real estate commission is you have to pay HST on the real estate commission. You want to deduct the mortgage, the penalty on the mortgage, and I'm going to talk to you a little bit more about that. There's usually about $1,000 for the real estate lawyer fees for your sale. And that gives you basically the equity on your property to sell. So if you've got equity, once you do that initial calculation, I find a lot of people will have maybe some debts that they want to pay out, credit cards, lines of credit, possibly a car loan. So then you can deduct that from the equity. And then you can think about your purchase. So I think the first thing that you want to make sure you do is understand how much equity you have. We go through that calculation right at the beginning. So if we get a call from a customer, they're like, I'm thinking of selling my house. We go through a really quick calculation, and we've got a really great spreadsheet that you can use if you want. We can fill it in for you, but that's really something that you want to get a better handle on. And then usually that equity in the house that you have, aside from allowing you to kind of you can hold some of that back for any renovations on your new property, usually the equity that you have from the sale of your house will then go for the down payment on your next house plus the closing costs. And we all know that there's the provincial land transfer tax, depending on what province you live in. The land transfer tax is different. And then we also have legal fees on the cost of a purchase. Now, one of the really neat things I have is if you go to my website at skipthebank.ca, there is a really great app that you can download. You just go to the website at skipthebank.ca. On the top right-hand corner, it actually lists all of the different closing costs when you purchase. And also you can calculate the land transfer tax from different provinces. I was just actually hosting a webinar for realtors today, and I was going through the mortgage app that we have, and again, you can find that at skipthebank.ca in the top right hand corner. And it's funny how low the land transfer tax is in the Northwest Territories. Awesome. So that's the first thing, and thanks for those of you who are joining me. Today we're talking a little bit about what you need to know when you sell your house. The next consideration is whether or not you're going to if you have a mortgage on your house, are you going to take that mortgage or port it to the next house, or pay the penalty and just get a new mortgage? So sometimes, I think most of the time, I'd say 50% of the time to be fair, paying the penalty now and getting a low mortgage rate makes sense. And the reason for that is, you know, your interest rate on your mortgage might be 2.5%, 3.5%, maybe even 4%. And right now, if you've got great credit, you'd be looking at an interest rate on a mortgage of closer to 2%. So I was just talking to somebody today who had a mortgage with Meridian Credit Union, and credit unions have high penalties. So as a mortgage broker, we deal with banks and wholesale banks and credit unions. Their penalty was almost $11,000, and they only had like a year and a half to go to discharge the mortgage. But it made sense to pay that penalty because they were getting a significantly lower rate. So kind of keep that in mind. The second thing that we're looking at right now is the considerations you need to think about when you sell your house. Are you going to port that mortgage or take that mortgage with you to the next house, increase it if you need to, decrease it if you need it, or pay the penalty? Really wonderful things. Thanks so much for joining me. And tonight we're talking about some of the considerations you need to make when you're thinking of selling your house. So the third one is, if you are porting your mortgage, for example, you have to requalify for that mortgage, even if you're porting it. So I just spoke to someone last week, and they're like, well, we're just going to port our $300,000 mortgage. And I said, well, if you're porting that mortgage, you're going to need to requalify, even though you're not changing the amount of the mortgage. And so they were curious about that, because when they originally got this mortgage, thanks so much for joining me. When they originally got this mortgage, they were T4 employees, and just through the course of the pandemic, they've become recently self-employed. So that had a significant impact on the kind of mortgage that they had. So their existing lender all financial institutions will have to requalify you for the new mortgage you're going to get, even if you're getting less money. And so if your employment status has changed, it's going to impact you. So you want to make sure that if you are thinking about buying another house and moving, we normally talk to people 8 months up to a year before they're going to make the move, just to kind of get them financially ready. Sometimes we get the call a month before they're going to list their house. Sometimes we get the call from the client after they've purchased the house and they've waived their conditions, and now their their current mortgage lender will not approve them. We're okay with that. We can almost get anybody approved for a mortgage, and we're happy to say that. So just to kind of wrap up tonight, one of the things that we're talking about is what you need to know before you actually look for a home. And to start with, I've got a really great mortgage app. If you go to my website at skipthebank.ca, on the top right hand corner there's a app that you can download. You want to really consider some of the costs of the mortgage. So, you know, aside from selling your house for a bunch of money, there's going to be the real estate commission, the HST on the real estate commission, the legal fees, when you sell, you know, possibly the penalty on the mortgage. And then that kind of leads us into the conversation around, okay, I'm selling my house. Should I port my existing mortgage, or should I discharge the mortgage, pay the penalty, and get a new loan? And sometimes it makes sense to pay that penalty. I would say probably 2/3 of the time it makes sense. And we can kind of go through that calculation for you. And then the third thing is, if you're going to be buying and selling, has your employment status changed? Because if you're going to want to get the same mortgage, even if you're porting the mortgage, the financial institution is going to want to requalify you. So a lot of people through the pandemic have their employment status has changed. They may have been employed or a T4 employee. They may have gone to be a subcontractor, or even started their own gig. So be sure to contact us. We love helping people, and we just do such a great job at it. If you'd like to connect with me, you can just check us out. Obviously, just send me a message through Facebook, or you can check us out at skipthebank.ca, and you can book the appointment there. Thanks again. Looking forward to chatting with you. Bye for now.